Hello, everyone, and welcome to our VantagePoint live trading session here, right here on YouTube. So glad to have you guys here again today for just a fun session. It should be an interesting one, right? Especially with where current market conditions are at. So with all of the chaos that has been happening in the markets, we certainly want to make sure that we understand how to play defensive as well, and also what areas of the market to focus on. So we're going to get started here in just a moment. All right, looks like we are all good to go. I just wanted to very quickly do a quick sound check, make sure you guys can hear me loud and clear. Looks like we're good on that front. Everyone can see me, everyone can hear me. So I love that when technology works in our favor, right? So perfect. Let's go ahead and dive on in. So today, I think the most important focus is understanding the market conditions, understanding when to be on the defense, when to be on the offense, and really just better strategizing around the current conditions. Because if you better understand the current market conditions, that can give you valuable insight, valuable information on how to strategize around those current conditions. So let's go ahead and dive right on in. We could just pull up a portfolio here in VantagePoint, but for those of you who are not really familiar with VantagePoint just yet, I know we do have some users who are on our training session today, and those who maybe have never seen VantagePoint before. So if you are already a current user, can you just let me know that in the chat as well? Just communicate with me during the session, because these live sessions really are about answering your questions. So give me some feedback. Let me know if you are a VantagePoint user or if this is the first time you're ever seeing VantagePoint, so I know if we need to circle back to the basics, which we'll start there, but I just want to know how far in depth we need to go. Perfect. All right, guys, so let's go ahead and keep rolling through. Looks like we have a couple, well, more than a couple that are VantagePoint users and those who are not. So we'll certainly take it as we go. Just remember to go ahead and throw those in the chat or the comments section, if you will, for me, so I know as we go through, especially if you have questions throughout the session. So diving right on in, let's go ahead and start with the SPY. You guys can see I've already got that kind of ready to rock and roll here, because market conditions can be better understood by evaluating the major indices. Here, I'll pull up the SPY. This is the ETF that follows the major indice, the S&P 500. So using the ETF, we could certainly gather that information. You could also, if you're a futures trader, you're probably familiar with it. So you'd probably want to use the ES or the E-mini S&P itself. The SPY is the derivative of that. So we could look really at either to find those market conditions. S&P going to be a little bit more of a better practice, right? Always best to have those best practices in mind, but we can use the SPY as well. I had some questions on that throughout the week, so just wanted to share and pass along that with you. So let's take a look first at the VantagePoint software. I'm going to keep it real simple for everybody, because guess what? VantagePoint keeps it simple. So we're going to pull open my chart for you guys here, and you'll see in just a second. All right, so now I've got the SPY pulled up. So you should be able to see the chart here. And really, essentially, for those of you who have never seen VantagePoint before, it's really this simple. Where you see red, you can expect bearishness. Where you see green, you would expect bullishness from that standpoint. Now, of course, we never want to rely on just one indication or, one, we'll say for VantagePoint family members, we want to use more points of confirmation as well. And so confirmation is going to equal confidence when it comes to making trade decisions. And that's what's so important right now under current market conditions, is making sure that you have the confidence to trade strategically. And if you don't, well, then maybe find another asset, or maybe it's just not the right day. So we'll take a look at a couple of different scenarios here. So let's walk through as we see VantagePoint actually signaled this trend to the downside starting back in February. Now, Yes, this was before that major fun trend to the downside, and I say that sarcastically, sorry everyone, but yeah, this was probably not a very fun ride for a lot of you unless you had VantagePoint where you caught that crossover to the bearish side. This means that the bears are now taking over. Now, let's talk about that confirmation that we were referencing before. So, what can we use to have better confirmation? Price action. Not only do we want to see what the expected trend is expected to do, but we also want price action to be expected to follow in that direction as well. So when we see our neural index, now this is a proprietary indicator here in VantagePoint, but the neural index uses data based on the neural networks that pulls from just millions and millions and millions of different data points across many different markets, thousands of markets, to identify this predictive price action. And I can kind of peel back the layers of that here in just a moment. But again, kind of walking back through our pieces of confirmation here. We have our crossover. Then we have our neural index down here at the bottom, which is going to also confirm that we would expect bearish price action over the next 2 days. Who doesn't want a 2-day outlook into the price action of the markets? Raise your hand, right? If you do, or just type yes in the comments section for me, right? I'm hoping that that was a rhetorical question, of course, but we do want to see this bearish price action confirming the direction and timing of the trend as well. So already we have 2 points of confirmation giving us a lot of confidence that, hey, if we're in a bullish position here, you may want to think about some extreme caution. There are some red flags showing themselves, waving, nice and high that says, hey, be very cautious here because we're seeing some shifts in this trend that could signal kind of a look out below scenario. So looking at the trend, looking at the neural index, and then pull in a measure of strength. So you can see we're just layering on these confirmation points by coming down to the next indication, which is our predictive differences. Now we call them predictive differences here in VantagePoint, but what this tells us is actually the strength behind the current trend. And what we very quickly come to see is that these strength indicators, they're starting to trend down, which means our previously bullish trend here is already starting to lose strength. Well, anytime that you lose strength out of a trend, what is that going to signal to you? Caution, right? Maybe you should switch up your strategies, adapt so you can overcome the possible shift, right? Are we talking defense now or offense? So these are the key points that you really need to understand when it comes to the VantagePoint software. It doesn't have to be complicated. You just need the confirmation to have the confidence to put your strategy in play. All right, so these are the things that we're going to really be focusing on today. And of course, I've got some other predictive indicators here in VantagePoint that I can show you as well that will kind of bring things full circle. But the base of VantagePoint here is the power in the confirmation. Now, as we get into, deeper into our training today, please understand I am not a licensed advisor, so I'm not going to be giving you any trading advice today. The information that we provide here on these live training sessions is really to give you the information you need to make a more confident trade decision and to share and pass that knowledge along. We've worked with thousands of traders, tens of thousands of traders over the many decades that VantagePoint has been helping traders in the markets to trade more confidently. And so we certainly would, love to just pass that knowledge along in whatever way we can. And one of that outlets is here on our live stream. So don't forget to subscribe as well, because we do try to share that information as much as possible. So let's go ahead and get on into our current day. So now that you understand how the VantagePoint indicators work, we're really looking for bullish trends or bearish trends that can help you in a lot of different strategies. We could also identify areas of consolidation. If you are, an options trader and you like delta neutral strategies, we'll have to do a training on something like that here very soon. But right now, I think the key focus that we've all heard is volatility, right? There's just so much volatility in the markets. There's so much fear in the markets. If you've heard that comment more than once today, let me know, right? Because I mean, it's everywhere. You turn on the news, you open a web browser, and it's all about market volatility. So why not understand that volatility so you can either use it to your advantage or be prepared for it so you're not afraid, right? Trading when you're afraid, that's always a bad idea. That brings in emotion that can cause a lot of damage. So we like to remove the emotion in VantagePoint and keep it about the data, about the analysis. So let's jump on back to our chart here. Now, if we can see our crossover is green, and again, it's really that simple. When the shaded area in the trend is green, we would be expecting some potential bullishness over the next 2 days. Now, I want to clarify because you might be thinking, well, it's green, but things didn't go up. Well, correct. Let's take a closer look. I'm going to zoom in a little further so we can take a look and see. You see this blue line trending down here? That tells us there's not a lot of strength within that trend. And so that would really give us an area of consolidation or some uncertainty. Well, what do you need to know about uncertainty, about volatility? When to stay away too, right? When to, again, go on the defense, put in tighter stops. When are some of these red flag signals coming out? But there are other areas of the market that you may be able to look into. This is just one area of the market. This is the S&P. So we know that this is a driver of a lot of, other markets and a lot of other indices, but there's still other sectors in the market. So are we, panicking, or are we strategically planning out a trade plan that could work under current conditions? Who has a trade plan that uses volatility? Does everyone use volatility here, or is that something new that might just be heard for the first time? Maybe you just heard that for the first time today. Volatility is a constant theme in the market, but I find sometimes, what you don't know is what you don't know. So let me know in the comments if volatility is something that you have heard of before, if you're familiar with it, or if you're familiar how to use it as well. All right, that's okay. Welcome to everyone who's just joining us a few minutes after, but we're just diving into our market overview and our market analysis. So we talked about those points of confirmation. So our first point of confirmation is the green trend. All right, we already know that it's green, but it doesn't have a lot of strength because that blue line is pointing down. But we actually have additional crossovers as well. So we're not just looking at that medium-term crossover. I'm going to start from the very beginning, and we're going to go through our short-term crossover. Our short-term crossover is the most sensitive crossover. And you'll find we're going to use these indicators together to help us better understand the progression or strengthening of the trend. That's important. The strength, the progression. Is this a stable trend, or are we experiencing some turbulence here? We want to know what the battleground looks like when it comes to the trend. So if you notice our short-term crossover, and if I zoom in just a little closer so you guys can see that nice and clear, you'll notice that that crossover here is in fact bearish. So we actually got that crossover on 4:15, all right? So on 4:16, the evening, last night, we already knew that we were expecting some potential bearishness already, all right? So we saw some weakening here, and let's look down at our neural index, right, which is also bearish. It's red. That means price would be expected to go down over the next 2 days. Any surprise there, guys? Right? So we would expect to see some possible weakness or some continued consolidation here as we come through our market trend. All right. So what else do we see from our current chart? We can see the predictive differences or the strength of that trend on the shorter term, that light blue line coming down already as well. That would also give us pause for concern. The other piece here is our medium-term predictive difference, which is going to give us the strength of the medium-term trend. This is still going up, but not very strong, guys. So we would really kind of look at this as fairly consolidated. Same with the long term as well. So we have one that's going down, two that are going slightly up. I don't know if you want to call that a technical term of a mixed bag, but does that give you the confidence to take a position there? That's where you, as the trader, make the decision based on the data, right? And if you find yourself not having enough confidence to take a position, well, great, you've already made a trade decision. You've made a trade decision to stay out. Don't second guess yourself. Don't second guess the data. Have a plan, trade the plan. If it doesn't fit the plan, that's okay. There's always going to be more opportunities in the market, right? All right. Any questions so far? All right, let me grab my pen here, guys. I'm sorry, I should have had this pulled up previously, but I think it got closed out on me. Okay, so Rodney, I appreciate your comment. I was just taking a second to look through some of the chat as well. In volatile conditions, think about this from a conceptual standpoint, right? Do things tend to move very quickly or very slowly in a volatile market? Right? They tend to move pretty quickly, right? So what that would signal to you is these trends may be shorter term, right? You may see some very quick opportunity potential, but you would need to be able to take advantage of that rapid movement very quickly. So you may use things more like the short-term indications rather than the more conservative indications. But we can also use them together. And in fact, I'm glad you asked that question because we'll go into that right now as we go through our progression of the indicators as well. So let me just grab my pen here, sorry. And that way, oh, sorry guys. All right. Had things flashing all over at me. All right. There we go. All right. Sorry, that was my computer screen going a little haywire, but there we go. Got the pen fixed. So, all right, as we see bearishness, right, on our short-term crossover. All right, this is again, Rodney, going back to your question, is the shorter term indication during highly volatile times is likely going to give you those quicker readings that you might need to get in and out of positions quickly. All right, now take that for example, the short-term crossover that we just reviewed. We had a short-term crossover here, which would have indicated a potential entry here and an exit likely here when you start to see this short-term coming down, or maybe even here as we don't have any more movement to the side. But I'm going to show you a better way to set profit targets using some of the predictive indicators here in just a moment. So remember that thought, we'll circle back to it. All right, if we go to our medium-term crossover, which we've already looked at, we can now see some of that contradiction. Contradiction does not necessarily give us confidence, so we do want to be careful there. And this is all about confirmation and confidence, guys. I can't say it enough. Our long-term, which is our 3-day trend forecast. Remember, the short term is a 1-day forecast. The medium term is a 2-day forecast, with the long term being our 3-day forecast. So basically, what do we expect this trend to do in the next 3 days in the future, right? That data is already built into the power of this predictive indicator. So we're using all 3 of those crossovers on different time frames to better understand the progression of the trend. All right. So we did have a short-term movement here. However, that didn't last very long. And we were expecting that because our long-term trend indication actually never turned bullish. We can see that even in the midst of this upward movement here from a longer term perspective. Now remember guys, there's different trade time frames as well. So what works best for you might not be what works best for someone else. So you're going to want to figure out your trade plan. What is your strategy? Then you can trade accordingly to what the markets are giving you. All right. So if you notice, this trend never turns green. This entire time it's remained red. So we already know we're still in a bearish state, but could there potentially be some shorter term opportunities here using that volatility? And the answer, yes, of course, right? As long as you have a strategy around that. Now, let's take a look at our final crossover, which is going to be our triple cross. And for those VantagePoint family members who I've trained before, or you've worked with me personally, you guys know I love the triple cross because it provides so much information, not only about the integrity of the current trend, but also potential areas of future support and resistance. This triple cross indicator provides that insight into the trend strength because this is actually made up of 3 different predictive moving averages. All right, so we're taking the predictive data, the just these incredibly powerful moving averages, taking into account many different markets that are impacting our current market, and seeing how they're reacting to each other on the screen. So it's color coded too. Who doesn't love a good color coding system? I know I do, right? Red for green, or I'm sorry, red for bearish, green for bullish, and well, yellow for consolidation or areas of caution, kind of like a stoplight, right? So if we take that into account, let's see, our triple cross is bearish. We go into this area or zone of yellow, which would be caution or consolidation, if you will. Now notice at this area of yellow, we see this bearish trend starting to weaken. That's why it's yellow, right? We can see the short term kind of coming on up, right? And our price action starting to test this key level right here. That would be our T-cross long level. That T-cross long indicator is a predictive 18-day exponential moving average, all right? You're not going to see that anywhere else because, well, it's predictive and VantagePoint, we have a patent on that. So there you go. But with that predictive moving average here, we now have built in a dynamic level of support and resistance. Who uses support and resistance as well? Because that really does go hand in hand with volatility, right? How many times do we see a breakout and implied volatility rush after breaking through a level of resistance? Or a breakout to the downside because we just couldn't break through that level of resistance, or vice versa with support. I'm sure many of you have, right? Yeah, all right, so some of the chats are starting to come in as well. So perfect. Yes. The support and resistance is incredibly important because it provides these pivot points. Well, now with the triple cross and that T-cross long level, you now have an area of weakness where we're approaching a level of dynamic resistance here. And I say dynamic because it changes with price, right? It's not a static level of verified support or resistance, which we of course do have on VantagePoint as well. But just walking through our crossovers and the power that they provide on their own, we can see this dynamic level of resistance holding very strong. Okay. Now I said I was going to show you how to use the volatility along with the support and resistance. So let's go ahead and take where our price action hit this T-cross long level right here. I'm actually just going to drop a line right here because I am terrible at drawing a straight line. So I am just going to drop it right there. All right. Perfect. So as we see here, now I'm going to switch over to our short-term cross. So our short-term crossover happened here, which would mean your entry was somewhere on this day, right? And you were looking for a T-cross long level. Let's just put that crosshair right here, right? We're talking about shorter-term volatility, all right? Now, if we take our views and switch this back to the triple cross, right? If you were to enter somewhere in on this day, right? I'm going to move that over just a little bit so I can actually grab my drawing tool. So we can draw trend lines here too. So here's my profit calc tool. So I'm going to draw somewhere from this day to, let's just say you set your profit target right at that T-cross long or somewhere close to it. All right, that's still a 4.37 move in 3 days. Now, obviously we can see you could have done better, or you might have done, right at the open, or, at the close, wherever. But if you can see your expected entry on that day was here. all right, was on 410. So you can better strategize using even things like the predictive trade candle than using the dynamic resistance as potential profit targets as well. Maybe at that point you set a tighter stop, maybe you exit out completely, right? But these are ways where you can still find shorter term movement even in downtrends, right? Shorter term bullish movement even in downtrends. Now, if you want to play this to the downside, if it hits that level and bounces off, well, great, we can do that too. We can look at this exact inverse scenario as well. But what you're seeing right here is something that's been far overextended away from a mean, right? And then has a tendency to come back and snap back to the mean. I imagine that as a rubber band. So this is what you would typically refer to as maybe like a reversion to the mean type scenario. Does price have a tendency to overshoot, Scott? Is that what you're asking? Sometimes it will stay above. Where it closes is really going to tell you the most about the future action. So how price reacts to those key levels. Let's think of these as kind of like the front lines of the battle, right? So if price can battle and get over that line, fantastic. Then we've broken through that level of resistance, right? But if it comes back down and closes below, we already know that that's going to be a harder fought battle a little later on. That's a failure off of a resistance level, and likely we're going to come back down before trying to retest. All right, and you can see that happen several times. I'm actually just going to back this out, right? So you guys can see. Oh, there we go. All right, we'll just move this off to the side. But we can see when price gets very far overextended, and then we get that short-term crossover, which actually happens right around here. I'm going to switch over to my short-term cross, all right? And then it comes up and touches that T-cross long level right around here. Triple cross, boom, it actually does come just over it, right? So again, if you're setting profit targets or setting very, tight stop losses at that point, even if you got in on this day and you made it to the T-cross long, what's your profit target look like? So, all of this is going to depend again upon your potential strategy. And this is just on one of the major indices. So looking at our current conditions, we know that there's a bit of uncertainty there, still some volatility in the markets. How can we play that? One other way you might want to assess the markets is looking for higher quality opportunities as well. So you can actually, in VantagePoint, you can use what's called the 52-week index compare and actually compare individual assets. Like let's just, let's take, I don't know, somebody give me a ticker symbol. Let's take a couple of yours in here, all right? Or we could use the scan. We could look for assets that, are outperforming the major indices, but we can actually compare the major indices to the individual asset to see, does this asset typically outperform or is it typically underperforming the major markets? Because especially in current conditions, you may want to look for assets that are typically outperforming or do really well over the major indices, just higher quality opportunities, because that's going to may give you more confirmation or more confidence to trade those as well. So, all right, give me 1 second here. I just see some of those coming through. All right, sure. So let's go PLTR, right? That's always a major one. Tesla, of course, Nvidia too. Yeah, I got you guys. All right, we see them coming on in now. So let's go. I try to remember most of these ticker symbols, but Perfect. Okay, sure, Harry, no problem. I gotcha. Let's look at GSK. These are just ones you guys are typing in now, so thank you so much. Tom, hey, I see you there. All right, perfect. Glad to have you in. And okay, yep. We can look at the futures. I'll pull up the futures for the NASDAQ versus the Qs, okay? So let's take a look. Let's start with PLTR, right? Always a super fun one to take a look at. Whenever we're looking at different assets like this, Okay, I've got a couple more coming in. So, all right, we'll take a hold on the ticker symbols for just a moment because I have quite a few already pulled up. So let's. I see. Whoo, you guys are fast on the chat today. I'm loving it. All right. So what do we see with PLTR today? When it comes to our predictive indicators, let's jump on in. Let's take a look at that short-term crossover. So we are still bullish on the short-term crossover, but we do see some potential weakness. So that's really where we need to better assess. Okay, do we have a lot of strength here? If you're already in this trend, then maybe you might think about staying in, or maybe you're tightening up some risk parameters as well from what I just see off the bat. But let's look from a technical standpoint. If you see our short-term crossover, the trend is still green, right? Now, the pause for concern is going to be this red neural index right here as well, which means we would be expecting some possible, bearish price action, meaning lower highs or potentially, lower lows as well. So this is where our predictive trade candle comes into play. Now, we haven't really talked too much about the predictive trade candle yet, but let's do that here on PLTR because we can see the predictive range here on PLTR is set to be, let's see, it's about $5.10 with a predicted high of 95.25 and a predicted low of 92.70. All right, so where was our predicted range on PLTR today? 92.27 and 95.11. I don't know how much closer you guys want to get there, right? On the predictive range. Wow, I didn't realize it was that close. That's awesome. And you'll find, the software just still wows me every single day because you'll look at things like the predictive range and just be amazed at the power of the AI and the artificial intelligence and how it can forecast this data. And that's because we're pulling from, many different sources. Keep in mind that the forecast you're seeing on the screen, let me just peel back the onion here so you guys can see, is actually looking at many different markets. So there's a lot of resources in VantagePoint here too to get some additional information. But I want to show you, this is PLTR. This is the market we're looking at right now. This is what I would consider kind of the parent market because that's the one that we're actually visualizing. But you can see there are 31 different markets that are actually being analyzed. All of this data is then going into the neural networks and being run through those neural networks predictive analysis to understand how these markets are impacting, basically, pushing, pulling, and driving the action of PLTR. That's how VantagePoint is able to get so close with this data and really forecast through some of these bumps in the market, even in incredibly volatile times. So just a little sneak peek kind of under the hood, if you will, for those of you who don't have VantagePoint. There's so much more to this chart than just simply red and green. Beautiful part about it is it's simple and easy to use. So as we see PLTR, our first signal, let's walk through the signals again from VantagePoint. So a bullish expected trend would be signaling here from our artificial intelligence because we have a bullish crossover here, meaning the blue line crossed above the black line and the trend is green. So let's check that on our first point of confirmation. Then we come down and look at the price action to say, are we expected to be bullish on that price action as well over the next 2 days? All right, so as we see 2 points of confirmation already, what are our predictive differences saying at this point? And again, this is everything to the left of that dotted line. Now, all of those are going up as well. So we have not only a trend indication, which is our timing, our price indication, but also strength coming into this bullish expectation, which gives you a lot of confidence then in the upcoming trend. Now, let's also take a look too at our other crossovers. So I'm just going to leave my kind of drawings there. I'll leave my crosshairs right where they are. And let's walk through our next trend indications. Here we have a medium-term crossover, which would tell us that we would really expect that trend to last at least another 2 days going in the bullish direction. All right, again, crossover, neural index, predictive differences, all trending up. So now we have 2 crossovers confirming that bullish expectation, right? And I say expectation because this is in the future, guys. You're getting this information the day before, right? So on this date, which is 4/9, you have that data on 4/9 at 6:30 at night for the next day, right? So you're actually looking into the future 1, 2, and 3 days using these forecasts. All right. So the software updates every night at 6:30. You read the forecast for the anticipation of the next trade day. So at this point, then let's take a look at our long-term crossover. Now we don't have a long-term crossover just yet. Remember, this is a 3-day trend expectancy. What we do have though is a blue line or a predictive moving average that is starting to trend up. It's starting its ascension kind of up the hill or up the mountain, if you want to say, right, to reach the peak. So once it reaches the peak, is it going to fall down or is it going to cross over? And clearly we can see we cross over, which would give you even more confidence of staying in. So we're at position management at that point, using maybe the short or the medium term crossover as full confirmation, especially in these shorter term expectations with the volatility. Kind of going back to the earlier question that was asked. So let's add on that triple cross like we talked about before. Let me remove some of these drawings here so they don't get in the way. There we go. All right, so if we switch over to that triple cross, we can now see, look at that. Again, once we hit that battlefront right there, the kind of battle line here on whether or not we were gonna continue bearish or break bullish, we can see we break above that dynamic level of resistance here and stay above. That's the key, stay above. At least 2 days we were able to stay above, right? This high range day, very high volatility, the fact that we stayed above tells us that we could be in a potentially, stronger bullish trend. All right. Just like what happens back here, we come and test it, but then we come down and we stay below. We know that this is not just a momentary gap down. We know that there's something likely larger at play because we cross below and we're able to stay below that T-cross long. All right. Now, as we are above that T-cross long, we're now in a confirmed bullish trend. Now, as I mentioned, we're still bullish because the trend is green, right? But it's, again, very simple. All of our crossovers were still bullish at this point, even our long-term crossover. So looking at this forecast last night, right, you may have seen a little bit of pause for concern on the neural index. Sorry, guys, I know what that's called. On the neural index here, okay? But using your predictive trade range, and this is why I brought this up, is that then you can even use this to help you set stop losses as well. If you decide to use the predictive trade range, you may want to set that a comfortable distance, maybe a stop loss, a comfortable distance from that predictive trade range, because you know the expectation of price then. It could travel between that predictive price range throughout the day. All right. So what did PLTR end at? Does anyone know? I can look it up real quick. Hang on one second. Dun, 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 dun. What was it? 90, around like 93.50, 93.60, somewhere around there. Perfect. All right. So if we take that into account, well, great. We closed right towards the upper range of the day. And we already discussed that this predictive trade range was just about spot on. So if you set that just a comfortable distance below, you were protecting profits there as well. All right, let me see. We've got some questions coming in, so just want to make sure. So if we take, yes, thank you. Thank you, Tom. Yes, you are correct. Yes. So I'm sorry. I said the predictive midpoint. Guys, just to clarify, I said 92.70 was the midpoint. I'm sorry, I just glanced over there, right? I'm human, not AI, so I do make mistakes occasionally. But even here, we see 90.15. So we actually did not hit our as low as we would have expected to today. So setting your stop potentially just below that predictive low or a comfortable distance, whatever your strategy says at that point, still the result is the same, right? You're still protecting your profits, but you've not stopped yourself out, right? If you're looking to continue in that position. Now, tonight, when the software updates, you'll want to look to see, okay, are we expected to still be on this bullish trajectory? If so, great, right? So let's take a look at PLTR. I said we were going to pull up a 52-week index compare, right? And we can see that PLTR, in fact, this 52-week index compare, guys, this is what you see here on the left side of the screen. And so with our 52-week index compare, we can see how PLTR has performed as compared to the major indices. Wouldn't it be nice to know if a market has typically over the last year been outperforming the major indices, especially in current conditions, right? Wouldn't you maybe want to focus on assets that typically outperform the indices, especially with where the indices are at right now? Can definitely help you find some higher quality opportunities as well. And that's, again, part of this defensive strategy, is better understanding that confirmation is going to give you confidence, making sure that you have the right tools to assess the markets for what they are, not on what you think that they're going to be, but based on the predictive data, what's expected to happen. Because decade after decade, VantagePoint has shown what is expected to happen in the markets, and it tends to get it right. So here, just so you guys know how this works, one, this is a really, really great indicator, because what you can see here is that we actually compare that market's performance, the price gain of that asset, in this case PLTR, versus the indices themselves. And we take the average. Of course, we're using the average in this particular setup. We're using the average of the Dow, the NASDAQ, the S&P, and the Russell as well. So we have the ability to compare that asset's performance to those major indices. And currently, you can see it's outperforming by about 31.84% over the last 52 weeks. It's at its highest, it was outperforming by about 37.48, and at its lowest, basically bottom of the bottom, right, for PLTR, it was underperforming by about 10.04%. So really powerful data here to help you select kind of maybe wiser opportunities or more confident opportunities, I think is probably the best word for it right now, because with all the volatility right now, confidence, as I mentioned, is going to be key. Okay, so let's see. Re-entry long-term. Okay, all right. So this is a good one, Rodney. Thank you again for all of your great questions today. Yes. So when is the market expected to reverse? Well, no one knows for certain, right? But using the predictive data and the predictive analysis, you can have a heads up into when that's likely to occur. And the reason I say that is because if we can even just shoot this back just a little bit. I'm gonna pull open the NASDAQ here for a second, a little further, because someone had requested this, but I'm gonna move over to our triple cross, right? Because we can actually see where we had a fully confirmed 2 days below that T-cross long level as well, coming on down, right? So if the break below that T-cross long level signals a trend, a likely trend to the downside, what would then signal a longer trend to the upside? And that would be a break above that T-cross long level if we can stay above that T-cross long level. Now, what's really cool, you can put your crosshairs right there on the T-cross long level. That's, again, a predictive moving average that you'll find only here in VantagePoint. You can see the value right there at 19,031.13. We'd really ideally like to have at least 2 closes above that T-cross long level, right, before and right, there's always an and continued strength. Again, I mentioned that in the very beginning, but strength is key. So once we're at that sort of front lines, then can we close 2 closes above that T-cross long? If so, and we have continued strength pushing us higher, helping to stabilize or bolster that trend, the likelihood of continuing higher would then be that much greater. I hope that helps to answer your question. So are we there yet? And the answer would be no, right? It's very clearly easy to see. We don't have a close above that T-cross long, or we don't have 2 closes above that T-cross long level. We've tried, right? We tried here, failed. We tried here, failed. So we know that this level is very strong. It's very, very important to understand that these key levels are kind of that front lines of the battle between the bulls and the bears. And you know, it's like tug of war, right? Who's gonna fall over the line first, right? So when you think of it like that, it becomes very clear to see when we should be exercising more caution and taking advantage of those shorter term swings in volatility versus thinking longer term perspective. So right now, you know, with the current market conditions, you know, we've seen that there is still opportunities out there, but they are shorter term. They are slightly riskier as well. So you have to make sure that you have some risk parameters set in place. Who uses who has a set risk management strategy? Let me ask it that way, because there's plenty of different risk management strategies out there. But do you have a strategy or a piece of your current strategy set aside just to manage your risk in the market? Sometimes that looks like reducing, position sizing. Sometimes that looks like putting on tighter stops, taking shorter term positions as well. So there's lots of different ways to manage risk, but also too, something people don't think about is profit targets as well. And that's again part of that shorter term expectation also. All right, very good. Let's see. Yeah, perfect. Okay, great. So let's keep continuing on. I know I jumped over to the NASDAQ just to simply ask that question. You are very welcome. Absolutely. Happy to help. That's what I'm here for. As long as, everyone gets at least one or two bits, of information, of knowledge that you can take away from this and say, wow, this is going to help me in the future. That's why we do what we do. That's what makes my job so much fun, to be honest with you. Not only do I get to look at the markets all day, but I get to help people. So it's a win-win either way you look at it. So let's look at NVIDIA, jumping on back to some other markets here, because we do have right around 10 minutes before we sign off. So again, while I walk through this analysis, if you haven't already, please subscribe to the channel. We love to share as much information as possible, so get our notifications. All right, that'll just keep you abreast of what's happening with VantagePoint and how we're trying to help traders just evaluate the markets with more confidence. So let's take a look at our short-term crossover on NVIDIA. If you see NVIDIA here, we had that short-term crossover to the bullish side, but what are we seeing now, right? That's what we want to know. What is happening now with NVIDIA? So you tell me, what do you guys see here? This should look like a short-term cross to the bearish side here, right? So we know that we have some potential bearish weakness here as well. All right. Now, confirming that would be our neural index and the shorter term strength indicator, which is trending down. Our medium term is trending down, and our long-term difference strength indicator is sideways. So it's really not arguing at this point, right? It's just kind of given into the fact that the short and the medium are starting to trend down, right? So if we switch to our medium-term crossover, you'll notice that our medium-term crossover is still bullish, but it is the predictive moving average is trending down. So this would really give us a little bit of uncertainty there, some consolidation. Again, that consolidated state is going to tell you that there is going to be a little bit more caution exercised there with the level of uncertainty. And then if we move down to our long-term crossover, we can see same thing happening here. So this is very similar setup to the medium-term crossover. We can see that it's green, but it's trending down. The blue line is trending down. So that would give us an area of consolidation as well. All the while, our neural index is saying, hey, we're expecting bearish price action. So do we have really strong crossovers? The only strong crossover that we got, the strong signal, was from the short term, which was trending down. So that's going to give you an expectation of bearishness for today on NVIDIA. And I'm pretty sure NVIDIA was down today, right? So again, you had this information last night, all right? Here's what's even better. You had this weakness coming into NVIDIA prior to that, right? Starting back here. So if you did enter in this day, you had already started to see this weakness taking place, or possibly even yesterday here with the forecast. So if you were trying to do anything on NVIDIA, it probably wasn't a bearish move unless you were trying to exit or take profits off of a short-term pop in volatility, right? So here's where, again, I'm gonna use the triple cross as a potential target as well. And here we fail to stay above the triple cross with strength. Remember, there's always that with strength caveat, because we can break a level, but if we don't have the strength to maintain it or the perseverance to continue in that direction, it's not going to last very long, right? And that's a perfect example of what we see here, where we were already starting to lose strength as we came up and approached this level of dynamic resistance using the T-cross long. So if you notice, what we see here is that, I'm going to point it out so it's very clear to everybody, the short-term strength already trending down as we approach this key level here. So as we approach the battlefront, we got a little bit over the battlefront, right? And this is where, again, if you've hit your profit target, tighten up stops, do what you need to do to protect those profits, whatever your risk management strategy says, put those in place, right? Because if so, then you're stopping out at a profit rather than a loss. If you did choose to use the signals here, there was the potential for that. And again, in this area of yellow, notice too that the triple cross never turned green. So this is still telling you that we are in this area of consolidation, this area of caution. So you do want to still consider this very short term unless it proves itself otherwise. In this case, NVIDIA just did not, and it came back, bounced off of that, and continues to the downside there. Let me just clear off some of those drawings. There we go. My pen keeps disappearing on me, guys, so bear with me here. There it is. All right. So we ended, yeah, NVIDIA was down at like 101, I think, when it closed today. So again, using that predictive trade candle, we can also assess right here. So I think that covers NVIDIA. Anybody have any other questions on NVIDIA with everything we reviewed? We can also add, remember that 52-week index compare, a really nice way to take a look. So we can see here with NVIDIA, a little, worse performance in the markets than PLTR was, only at 23.94% right now, and its max capacity here or best performance was 46.97. So if we can get and stay above that T-cross long level with some good strength, that could lead us into a longer potential trend. That's not necessarily, your first possible entry point. Remember, we talked about those shorter term swings based on that volatility as well. So even using those points there, right, getting in somewhere on this, they will patronize it just a little bit, right? And even if you went to here where we see that T-cross long level, you could still have a fairly decent move, right? Or even if you got out a little earlier or stopped yourself out maybe at the close of that day, right? Still about a 6.28% move. Not too bad in a couple of days, right? So there are still areas in the market where you can, identify shorter term swings using that volatility, or, use it to the downside, use it to your advantage when we're talking about moves to the downside. Because if you notice, your indicators are going to work the same exact way. Let's take NVIDIA and just reverse this for a second, because everything we talked about to the upside, we're just going to flip on its head and invert it to the downside. We have a bearish crossover to the downside. If you like shorting the market, taking advantage of the quote unquote bloodbath, right? Well, then great. VantagePoint can help you on that too. Looking for confirmation to the downside here, confirmation to the downside here. Do we have strength backing that up? Sure do, right? So that's then where you can say, all right, what's my profit target going to be? What am I looking to hit? Are you setting a strike price? Better strategize around some option strategies there as well, even using that predictive trade candle or that T-cross long level. Also, you could also use, verified support and resistance levels as well. We do have those in VantagePoint. Also, we can touch on those the next training session. I want to get to GSK so we don't forget about this one as well in that. And then Pepsi will kind of round us out for the day. So, oh wow, look at this trend. GSK was was on a nice run until it wasn't, right? that's always the key there, right? It goes well until it doesn't. Well, hey, don't you want to know when it's not going in your favor anymore, rather than just hoping it's going to come back? Because I can tell you right now from working with thousands of traders, look, this happens and traders think, oh, it's going to come back, right? And this happens and they're like, oh, yay. And then they're like, wait, what happened here? Because they got it wrong here. They didn't see this. They didn't take into account that the trend had already shifted, because maybe they weren't using VantagePoint, or they weren't looking at it the way that they should have been. So to clarify, when you get a bullish crossover, right, blue line comes above green and you have that green trend strength here, we've got confidence in this trend to help you manage that through. And then once we get the crossover to the downside, along with that confirmation, again, confirming both directions. Now, your position management strategy might vary a little through here. Maybe you're taking shorter term swings along the way. But remember, at this point during market conditions, we did have a fairly good trend here in Pepsi. All right, so maybe you're just managing those stops very closely. Also, too, here, confirm bearishness, strength to the bearish side. Anyone questioning what Pepsi would have, or I'm sorry, what GSK would have done here? I keep saying Pepsi, it's because I said it last. I'm sorry, it's next. This is GSK. Anyone questioning what GSK was likely to do here at this point? I certainly hope not after this training, right? I think I've hopefully hammered the point home enough that when you see that crossover along with confirmation, you have a lot of confidence on what that trend is expected to do. If you know what it's likely to do, if the odds are stacked in the favor to the bulls or to the bears, make a decision based on that, not based on what you feel, because the markets honestly don't care about our feelings, right? As traders, they really just don't care about our feelings. They care about the data, they care about the price action, and that's what you should really care about in your technical analysis, in your strategic assessment of the markets, and the way that you strategize your positions around those data points. So here we can very clearly see that bearishness. So where are we at now? Okay, let's take a look. So currently, we have not yet crossed over on our medium-term cross. We have, however, crossed on the shorter term. So again, kind of looking for those shorter-term pops in volatility. We do see a bullish crossover here on 414. All right, let's take a look and see now where that triple cross was as well. And we can see the triple cross was here. Now, we didn't quite make it to the triple cross, right? But the fact that we didn't quite make it to the triple cross, we landed right around here on 36.12. And then started to see some weakness coming back in, tells us we may have a hard time breaking through that level. I don't know where GSK ended today. If anybody wants to let me know, I can look it up here. So we're at 35.93. So 35.93, just slightly above our predictive trade candle here. Still, the question is, did we break above that T-cross long? The answer is no. So we know that we still have some potential bearishness on the horizon, or we are still in a confirmed bearish trend, if that helps to elaborate on that a little bit better. Now, once you see that weakness started coming in, if on 414 you saw that crossover and your expectation was to get in, right? Then maybe you entered in here that day. I don't know. Your profit target could have been here. Hopefully at that point you set a stop loss. If you did take a short term or maybe enter in a stop, then maybe you got stopped out here or even here. It would depend upon your strategy. But whenever we're in a bearish trend and we're taking kind of a reversion type scenario, you do need to make sure you have some precautions set in place there. All right. But now that we've come up and retested that level, and if we see continued strength to the bearish side, all right, so I'm flipping this on us. Let's flip the script. If we start to see this continued movement to the downside and we start to get our strength indicators rolling over bearishly, then yeah, we would possibly expect a move to the downside for those of you who would like to short. Now, I don't see that yet. Again, this is just a hypothetical at this point because we're not quite there yet, right? But looking for these shorter term opportunities, just setting those quicker profit targets, kind of make the cash register ring very quickly type scenario can help you maintain your defensive position during the current market conditions. So let's go on through Pepsi really quick if you guys want to stay with me for just a moment. All right, Pepsi, we've got earnings coming up, guys. So anytime we're looking at earnings, that's something that you always want to be just aware of. You want to make sure that we're very cautious of what's happening fundamentally, and an earnings play is a fundamental play, right? So as long as you have a strategy around that, great. That's part of your trade plan. Fantastic. Make sure you have that plan and trade that plan. We can see there was some weakness around Pepsi. We weren't expecting, really bullishness across the board. We can see bearishness coming from Pepsi today. So we landed right. I think Pepsi landed right around the predictive high. So could we start to see a shift? Are we too far overextended? You know what? I am gonna just add on. Let's take a look at our verified support and resistance zones, guys, because this is going to help us to see. Interestingly enough, right? You look at this stuff enough and you can start to spot them, but VantagePoint makes it really easy. We're pushing up against a support zone here. So anytime we're up against a support, it kind of acts as a floor, or as sometimes a trampoline for price. So if we came down to test that support level and then bounced back up, that would be a signal of a potential pivot back up to our possible resistance. Now, again, you'd want to make sure that you have strength coming in. That's simply a hypothetical, right? Oh, give me 1 second. I'm sorry. I think I had a, there we go. I'm so sorry. I didn't realize my camera had switched. All right. So you guys got to see my thought process through that, though. So as we see here, our support level. All right, I'm not sure how much of that you guys saw on the chart, but here's a support level that we tested, and we failed to break any lower than this, which tells us we're likely coming up to that support level, testing it again. So if you can see now, that possible bounce is because we are likely up against a level of support. Anytime we're up against a level of support, guys, this is where buyers reside, right? This is where buyers or the bulls are just hanging out, right? Waiting for price to retrace before jumping back in. Be careful, because oftentimes you'll get caught in that at a bull trap, if you will, unless you are prepared strategically to take advantage of that shorter term movement. All right. That is the key, especially in the volatile conditions that we're on. Use your predictive data here in VantagePoint. If you don't have the VantagePoint software, use your indicators to confirm these bounces, because just because we see one day of bullish movement does not always signal the fact that we are coming out of a trend. So be cautious, be careful, set profit targets, and make sure that you're strategizing based on the current market conditions. So that's our session for today. I hope that you guys learned a lot about support and resistance, volatility, taking advantage of some of the volatility, or finding even other markets that you can trade during these volatile times, making sure that you have high quality opportunities where you have a lot of confirmation and a lot of confidence to take those positions. Again, make sure you're assessing those risk parameters as well according to your trade strategies. And if you're not using VantagePoint and you want more information on those, we'll put the link down in the chat. For those of you who are using VantagePoint and you're a VantagePoint family members, thanks. Join us on the next session. Of course, all are welcome. And if you're not using VantagePoint, make sure you're looking at your indicators and trading based on the information that's provided, based on the data. Because anybody can say anything on TV, and we know that, and it's oftentimes has a very short-term impact. So we want to make sure that the data is backing up that information, and oftentimes the data will signal that ahead of time. So why not use the data and make your own decision rather than waiting on everybody else? So I hope that everyone enjoyed today's session, and you guys have a fantastic rest of your weekend. Enjoy the holidays if you're celebrating, and we'll see you guys on the next live session.